here's our host, Tian Wei.
Hello and welcome to World Insight. I'm Tian Wei. China's factory activity kept a second month of growth, although at a slower pace after rapid gain in June. A key indicator, the Purchasing Managing Index, or PMI, was 49 in July, down from 50.2 in June, government data showed. As a whole, China's economy is at the cusp of recovery. The State Council has doubled down on policy toward economic stability. Amid uncertainty and global headwinds, what's the prospect of China's economic recovery? Could measures to stabilize the economy do the trick? Let's loop in our panelists. For the latest on the Chinese economy in Shanghai, we have Wang Dan, Chief Economist of Hang Seng Bank China. In Hong Kong, Edward Xie, Chairman and CEO of Gaofeng Advisory Company. So wonderful to see you once again, Ms. Wang. On China now, PMI numbers came out earlier, and further concern about what all the bigger environment mean for the Chinese economy. Tell me more about your thoughts.
Well, the policymakers and economic policies of different level in different sectors have all realized how strong the headwind is in the coming month. But when it comes to the potential growth of China, people are not that pessimistic, actually. Everyone has lowered their expectation of China's potential growth this year to about a 4% range. And there will be more economic stimulus coming, trying to support the real economy, especially the small businesses. And it looks like that China has once again prioritized the COVID control ahead of economic growth for a good reason. So now we would expect a certain level of relaxation in the housing market restrictions and probably more monetary easing in the coming month.
Mr. Xie, your thoughts?
Yeah, I agree with Ms. Wang's prediction. The first half of the year, as you know, Tenwei, is, we have a very mixed record of economic performance. I think the GDP growth for the first half ended up something like 2.5%. That was quite a bit below our expectation, and it's because of many reasons, but foremost was the pandemic, but also the geopolitics in many other parts of the world. Because of this somewhat of a low number, the Chinese government have come up with a range of measures to try to stabilize the economy, to try to control prices and so on, and to protect employment and so on for the rest of this year. So in general, the outlook for the rest of this year is more positive than the first half.
But we see the State Council, for example, and other different departments of the Chinese government putting out certainly quite a number of measures trying to, make people regain confidence in the recovery and also to deal with emergencies. Ms. Wang, how much, to what extent those measures are going to work? Who are they going to benefit?
Well, so far we have seen a strong support for the manufacturing industry. In fact, lots of the high-tech industry are getting more R&D money and bank support, even more than last year and the year before. But when it comes to the small businesses, they are getting quite significant support, but because of the weak domestic demand, especially in the consumer sector, it is extremely difficult. Everyone has realized that COVID control will probably stay in place for at least a few more months. And that means the small businesses will have to endure even longer period of this weakness in consumption. That would be a big problem if there is no targeted help in the consumer sector.
Consumer confidence also extremely important. We all know that, particularly when China is trying to restructuring its economy, depending more on consumption. Now, Ms. Wang, though we look at the practices, for example, taking place in the U.S. During the pandemic time, providing coupons and support to every individual consumers and families. But on the other hand, the advantage of U.S. dollar as the dominating currency in the world and the Fed's actions regarding the dollar would provide a lot of maneuvering space for the U.S. Policies. What about for China? Can we look at the U.S. case and say maybe China could do the same? Or China is a very different logic when we look at different policies and how they could work the best?
In this economic downturn, the government is only natural to rely again on the expansion of production rather than expansion of consumption to revive the economy, because historical experience has suggested this is probably the best way because it provides jobs and a steady stream of future income for families.
Mr. Xie, your thoughts?
That is very true. In fact, I think a big chunk of the budget is now going into infrastructure development, and history in China has proven that infrastructure development have actually was able to stimulate economic growth in China in a pretty efficient manner. The only difference now is that whereas in the past most of infrastructure was dumb infrastructure or physical infrastructure, today China has evolved into both physical infrastructure as well as increasingly digital infrastructure. The digital infrastructure will become a major enabler for the digital economy, which to what Ms. Wang was talking about is going to be a major enabler for the new and intelligent manufacturing as well. So you will see a lot of multiply effect by putting money into the investment side of things.
Inflation, of course, is another big issue. We have been talking about that for quite some time. But every time out of the new circumstances, Ms. Wang, looking at the inflation numbers China recently put out, and also the latest PMI, how should we understand where we are, whether the policies and measures work to a certain extent?
Well, we need to understand that inflation is ultimately a monetary phenomenon. And for China, after COVID, it has been relatively conservative when we compare its monetary policy to Europe and to the US. And that's why the inflation environment in China, measured by CPI, remains at such a low level. And when we look at the industrial inflation measured by PPI, it's the same story. It already plateaued and started to have this trend of going down. So comparing to the US, China has a very different problem. The inflation environment is quite benign.
How is the inflation issue impacting now on the policymakers' decisions and directions, as well as people's confidence in the economy, Mr. Xie?
Monetary easing wasn't a major priority for the Chinese government. And for them, it is really trying to drum up the demand side. And also, as we said before, to invest on the investment side to really stimulate the entire environment. So going forward, we expect that the Chinese government will continue to do so, and the inflation probably wouldn't get into a big problem going forward.
Earlier, we had a discussion about how the U.S. House Speaker Nancy Pelosi and also the actions and reactions from all sides are likely to impact on the regional economy, at least. But this is only one of those disturbing factors. What about the other parts of geopolitics that we are experiencing today? How do you see it's going to play a role in witnessing and also influencing the turbulence of the Chinese economy and its relations with the rest of the world? Mr. Xie.
I think in addition to Ms. Pelosi's visit to Taiwan, the war in Europe between Russia and Ukraine obviously could have created a lot of uncertainty. The pandemic continues to be an issue. And perhaps because of the pandemic and other reasons, so the supply chain has been disrupted for some time. And of course, also the sanctions by the US on quite a number of Chinese tech companies has become also an issue. So I think going forward, people are very concerned about how these scenarios will evolve.
What about the Chinese companies, especially tech companies, that are already going global and also listed in, let's say, many of the U.S. And Western financial markets? Ms. Wang, with latest events layered up, we see some of them already change their mind or trying to look at different options at the same time. Ms. Wang, how do you see this is going to impact the fate of these companies and also the future potential of Chinese tech companies within this country and even globally?
For Chinese tech companies, their era of rampant growth has certainly ended. And they're facing pressure from both domestic market and foreign market, just for different reasons. The foreign market's financing environment has worsened significantly with higher interest rates because the tech sector is highly sensitive to interest rate hikes. And the domestic regulation to the tech industry has, in a way, come to an end. But still, there is a understanding now, and they cannot just do the irrational expansion using up all the capital and draining up all the capital in the market. There has to be a reallocation of the capital more towards the high-end services and high-tech sectors instead of those labor-intensive segments of the industry.
What does that mean also for global companies? You know, many of the Chinese companies, whether it's public or private ones, whether it is state-related or private ones, they have been going global for really quite some time. Mr. Xie, you've been dealing with these companies and helping them along the way. But you know, right now with very, very different international environment, how do you see they are trying to swim in this turbulence streams?
Yeah, they do recognize that, and also they're becoming more sophisticated. I say about 10 years ago, most of the Chinese companies who are going overseas or going outside, so to speak, they are quite naive. They thought, if they go to a foreign market and do all the compliances, they'll be fine. But the reality is not that simple, as we know by now. And so for many of these Chinese companies, they're now deciding where to invest and where not to invest. For example, many of them are now very concerned about the U.S. because of what the U.S. government have been doing from a regulatory standpoint to many of them. At the same time, they do see opportunities in other places like RCEP, like Latin America, and also for some in Europe. For example, the Chinese new energy vehicles makers are really exporting a lot of new energy vehicles, mostly actually to Europe and also to the rest of Asia.
Very interesting. There are so many things that are pulling the picture to very different directions. I'm so glad to be joined by two of you to bring us more logical analysis of what exactly is going on and what needs to be done. Wang Dan, Edward Xie, always a pleasure. Thank you so much.